Hello and welcome. My name is April Schoen. I'm so glad you're here today. I work with professionals who are making good income and they're ready to turn their hard work into long-term financial strength. So as we're getting started today, as people are logging on, I want to just give you a quick story. So a few months ago, I met with a new client who's has built a thriving business and they're doing really well financially. And really on paper, everything looks great. High income, strong savings, investment accounts, retirement accounts. But as I started talking, he admitted something that really stuck with me. He said, I feel like I'm doing all the right things, but I'm not sure it's all working together. I don't really have a plan, just a bunch of stuff. And that stuck with me, but that's not unusual. In fact, I hear that, you hear versions of that all the time. And the truth is that many successful professionals, you don't need more complexity in your lives. What you need is more clarity. And that's what today is going to be about. We're going to talk about one financial tool that's often misunderstood, and that's whole life insurance. And we're going to talk about how and when to use it properly so that it can give you more control, more flexibility, and more confidence as you're building your financial future. Yes, it does offer protection through a death benefit to your family or whoever you've named as a beneficiary. But what most people don't realize is how you can actually use it while you're alive to grow wealth, access liquidity, and stabilize your overall financial strategy. So if you're wondering, am I saving in the right places? Is there a smarter way to reduce future taxes? How do I create a plan that works together, not just a bunch of different things? Then you're in the right place. And by the end of this conversation, if what we cover resonates with you, I'm going to show you how you can schedule a short consultation where we can look at your unique situation and explore what's possible. So let's dive in. Here's what we're going to cover today. We're going to talk about the different types of life insurance and what makes each one unique. We're going to talk about the benefits of whole life insurance, especially the living benefits that most people don't hear enough about. Why the death benefit still matters, even if you're already successful, when term insurance makes sense and how it can complement other strategies, and why this strategy works particularly well for physicians and practice owners, especially if you're dealing with high income, tax exposure, business planning decisions. And I'm going to share some examples with you of how other high-income professionals have used these strategies in practice. And my goal is not just to educate, but to help you think differently about how you're building wealth and to give you something actionable to take away. So let's start with a big picture overview of the different types of life insurance and when they make sense. There are really two main categories of life insurance, term and permanent. Each serves a different purpose depending on where you are in your career, what your goals are. One or both can make a lot of sense for you. In fact, I have both. And we're going to look at both briefly so you can understand where they fit into a smart financial strategy. Now, term insurance. Term is most well known and it's very straightforward. You're covered for a set period of time, think 10, 20, 30 years, and you pay a fixed premium for that time. It's often used to protect your income during your peak earning years. Think of it like you might purchase it early during residency or in your early practice years to cover obligations like mortgages, college tuition, practice debt, income. It's affordable, especially when you're younger and when you're healthy. That's why it generally provides a high death benefit at a lower cost. It's great for protecting income, like I said, student loan debt, young family income needs. But the trade-off is that it's temporary. Once the term ends, the coverage ends, and it doesn't build any liquidity. There's no cash value, there's no living benefits. So term is a great option for pure protection, but it's not designed to build wealth or to give you access to your money. Think of it like renting. You have coverage while you pay for it, but you don't own anything at the end. Now let's contrast that with a permanent life insurance policy or a whole life insurance. This is often used by physicians, business owners, others looking for more control in their financial world. First of all, it offers permanent coverage that lasts your entire life. It's designed to last your entire life, not just a set number of years. So no matter when you pass away, your beneficiaries will receive a tax-free death benefit. But one of the most important features is that it builds guaranteed cash value, and that grows tax deferred over time. That means you're not paying taxes while it's growing, and that can make a big difference long term. In addition to that guaranteed growth, many policies also include dividends. Now, these aren't guaranteed, but many companies with a strong track record have been paying them for decades or even hundreds of years. And you can use those dividends for many different reasons. Say to increase your cash value, buy more coverage, reduce your premiums. So it builds in some flexibility. And that's one of the things that I talk about is it does offer flexibility for future needs. Think retirement income, college funding, practice transitions. This cash value can be accessed during your lifetime. And I've seen clients use them for all of those needs, right? To supplement retirement income, to help with college funding for children, to help transition a practice, whether you're buying in or buying out. And it can also play a role in your big, broader financial strategy by offering liquidity and protection. You can access it quickly without early withdrawal penalties. And in many states, like Florida, it offers strong protection from lawsuits and creditors. So again, this isn't just about insurance, although that is a big piece of it. For many high-income professionals, it's about stability, being tax efficient, having a place to grow wealth, access liquidity when you need it, and enhance the overall strength of your plan. Now let's zoom out for a minute. And I want to talk about if you were to think about an ideal financial strategy and what it looks like, what would you want that ideal financial strategy to be? What would it look like? What sort of attributes would it have? What wouldn't it have? I've got a whole list here of ones that I think of, but before we kind of get into that, I want you to think, what would your ideal financial strategy look like? And it's not always necessarily just about growing assets. Of course, that's a big part of it. We all want our assets to grow, but it's also about protecting what you've built, controlling your taxes, being financially flexible no matter what life throws at you. So first of all, let's walk through what this means like in real terms. First, you wanted to help protect your wealth from unnecessary risk and market volatility. Here we are in 2025. Think about the market volatility that we've had this year. Now, I'm not saying you shouldn't be in the market. It's just that not everything should be exposed to it. You want to balance growth with stability so your entire future isn't riding on market performance. Second, we want to minimize taxes, not just down the road in retirement, but while your money is growing too. The less you lose to taxes, the more you get to keep and reinvest. That's why tax-deferred growth, tax advantage income later is so valuable. You also want the potential, right, to earn consistent competitive rates over time without stress that comes from the constant market swings. You're already managing risk in your career. Your financial plan doesn't need to add to that stress. Next is accessibility. Life doesn't always wait for retirement, right, for us to need to get our hands on some of our assets. So we want to maintain access without early withdrawal penalties, without red tape. So whether that's an opportunity, an emergency, you should be able to reach your money when it matters. And finally, this ideal strategy would help you prepare for life's surprises. things like disability, unexpected expenses, family emergencies, legacy planning. Because while we can't predict the future, we can put smart tools in place that help you feel confident no matter what comes next. So when we look at all these goals, protection, tax efficiency, access, flexibility, this is where whole life insurance can check those boxes and why it plays such a unique role in many clients' plans. So let's take a deeper dive into how that works. So let's walk through some of the biggest benefits of whole life insurance, especially as we're thinking about it being part of a broader strategy. So first, the most obvious is it provides an income tax-free benefit to your beneficiaries. So that could be your spouse, your children, a charitable organization. The money passes outside of probate and is completely free from federal income taxes. It creates an efficient, guaranteed legacy. Next, many policies offer both guaranteed growth and the potential for dividends. Now, dividends are not guaranteed, but many of the strongest mutual companies have paid them consistently for over 100 years. That's through recessions, pandemics, world wars, right? And that's part of what makes these policies so reliable over time. And speaking of growth, the cash value grows tax deferred. So you're not paying taxes every year like you would in a brokerage account. That can really add up over time and help compound your returns more efficiently. One of my favorite features is that you can access the cash value without early withdrawal penalties. So unlike IRAs or 401ks that lock you out until 59 and a half, this gives you flexibility to use your money when you want to and how you want to. Another benefit is having asset protection. Now, in many states, I'm in Florida, the cash value is shielded from lawsuits and creditors, which adds an extra layer of protection to your wealth. You have the flexibility to adjust your premium. So over time, you can use the dividends to offset costs. You can adjust the structure of how your payments if life or cash flow changes. And finally, this is a non-correlated asset, which means it's not tied to the stock market. It can be incredibly stabilizing in a portfolio, especially when things feel uncertain. So when you stack all these things together, tax advantages, liquidity, protection, stability, it becomes clear that whole life is more than just insurance. It's a versatile financial tool that can support your bigger goals. So let's shift the conversation for a minute to retirement and think about how this can help you have more financial freedom during that next chapter. So a lot of people think, hey, I'm not going to need life insurance once I retire. But the truth is, if it's structured properly, it can really play a strategic role in not just retirement planning, but also in estate planning. So first, it's going to strengthen your estate plan. The death benefit is paid out income tax free and can be directed to families, charities, trusts. It can be used to offset state taxes, especially if you have a larger, more complex estate. It can replace income for your spouse, for your heirs. If one spouse passes away, the household often loses a Social Security check, a pension, business income. So life insurance can fill that gap instantly, keeping the family's lifestyle intact. It can provide a safety net, right? As one of the most powerful uses is it being a safety net, giving you permission to confidently spend other assets like 401k, practice proceeds, investment accounts. When you know there's a guaranteed death benefit backing up the plan, it becomes easier to enjoy your money while you're living without the fear of what if something happens. It can reduce the pressure to withdraw money from investment accounts during market downturns. You can lean on the cash value as a bridge, which allows your investments time to recover. So you're not selling low or locking in losses just to meet some income needs. And finally, It gives you more control and flexibility. You can choose when and how to access your money, coordinate income sources more efficiently, design a retirement plan that works for your situation, not just some cookie cutter formula. So in short, it's not just about protection. It can be a valuable tool to help you preserve income, support loved ones, and help you enjoy retirement on your terms. Now, when you're going through this and thinking about, hey, what type of policies should I be looking at? Which company should I be looking at? Not all policies or insurance companies are created equal. So if you're going to use a whole life insurance as a foundational part of your plan, it's critical to choose a company that's built to last and structured to serve you, not just shareholders. So first, you want to look for strong ratings and long-standing history. Ideally, you're working with a mutual company that's been around for over 100 years and constantly has high ratings from independent agencies. That's going to tell you that they've weathered economic storms and can be counted on to deliver their promises. Second, consider dividend performance and fixed loan terms. Dividends are not guaranteed, but they can significantly enhance your performance over time. So look at a company's dividend history. Have they paid through recessions? Are their policies designed with fixed loan options or variable loan options, right? You want to make sure you understand how those work. And lastly, make sure that the policy allows for early cash value growth, has flexible term conversion options. This is especially important if you're starting with term and plan to convert later. That's a great option. That's what I did. I started with term insurance, and as my savings grew, as my cash flow, like income grew, and I was saving more, I've been able to convert term to whole life over time. You want a contract that's going to build value early and gives you flexibility to adapt without having to go through medical underwriting again. That way you can lock in your insurability. And choosing the right company is like choosing the right foundation for your entire plan. It matters. And it's one of the things that I walk my clients through step by step to make sure that we're building on solid ground. Now, let me give you some examples. I kind of want to bring this into life to really show you how clients can use their policies, especially in later stages of their careers or during big transitions. So first, we have the income tax-free death benefit. I worked with a client recently in his early 60s, and he's currently working with him, and he wants to make sure that his wife is financially secure no matter what. His whole life policy is giving him this confidence, knowing that if something happened to him, or I should say, when something happens to him, the death benefit is going to pass to her income tax-free, no probate delays, no tax concerns. And that protection lets him focus more on enjoying his life and not having to worry about the what ifs. Next is having access to built up cash value. I could tell story after story of clients that have used cash value for various things in their lives. So I'm going to give you some examples. It might be buying equipment for their business, floating payroll, buying houses, buying cars, sending kids to college, renovating their homes, paying for medical expenses. The options are endless. Because the cash value, you can do different things like taking a loan without triggering taxes or penalties, right? No underwriting, no red tape, just access to money that you've built over time quickly and easily. This could be a practice transition or scaling back. I've had clients who have wanted to reduce their hours and eventually exit their practice. Life insurance became part of the bridge, providing a supplemental income that helps you slow down without feeling all this pressure to sell too soon or draw heavily from retirement assets. It can be used as like an emergency fund, right? I had a client have an unexpected medical situation. And so without disrupting investment accounts or dipping into retirement accounts, she could use the cash value to cover the cost. And this gave her access to money without penalties, without delays, without interrupting her overall long-term savings and retirement plan. It's a game changer, especially during stressful situations. So these are just a few examples of how life insurance, when used strategically, isn't just about protection. It becomes a tool for freedom, flexibility, and confidence through your career and into retirement. So if you've been wondering how life insurance could play a bigger role into your financial plan, or you're not sure if what you have is even the right fit, then I recommend that we schedule a time for a complimentary consultation. This is where we're going to review your current plan, explore opportunities, identify any sort of things that might be missing, and also what the next best step is to protect and grow what you've worked so hard to build. The easiest way to do this is to book a call. You can go to my website, curryshowandfinancial.com. You're going to see a button that says book a call. You can also call our office at 850-562-3000. You can mention this talk and let them know you'd like to book a time for a call. Again, that number is 850-562-3000. You've built a great career. Now let's make sure that your finances support the freedom, the legacy, and the control that you want moving forward. Thank you so much for joining me today. I hope you find this valuable and encouraging. And most of all, I hope it gave you clarity about what's possible. I look forward to connecting with you all soon. Enjoy the rest of your day. Bye now.